Welcome, ladies and gentlemen. What's this guy saying is taking too long? I've been here all this time. What is good? So, word on the street. Staff of federal agencies are now potentially, if it gets passed, going to be allowed to hold some cryptocurrency. I don't know if that's good news or bad news, but they're allowed to hold small amounts. That's what the word on the street is. Now, that could be good news for crypto overall, but the same token, in the article, it just throws something very important about banks and non-banks. So maybe they could be testing it with the federal agents and they're looking to get their hands onto crypto. Personally, I think it's a money heist. You got BlackRock buying up all the Bitcoin. Now you got the government, but it's being sold on the idea that make America great again, man. We should be the home for crypto. Let the US government pick up all of the Bitcoin. With that being said, welcome to today's live stream, ladies and gentlemen. Bitcoin is flirtuous with the 90K region itself. We just had some news come out about the unemployment claims. That's come down. Shock. And then the core PPIs come in at 0.3%. They expected it to go up. So that's very interesting to see that the PPI story, the price producers index, is starting to show that inflation could be a problem. And that is what the issue is. As much as we're seeing the inflation rate sort of coming down, we have got things in the scope that could actually increase it yet again. So all of the Fed's work is in essence going to get put to bed because the way Trump is planning on doing things. Now, remember, why did you vote for Trump? Did you vote because you like him? Did you vote him because of his policies on deportations? Or did you vote for him because you don't like Kamala? What did you vote on him for? Excuse me. But ultimately, Trump coming into power is in essence aiming to make the dollar great again. The purchasing power of the dollar is down like massively. Like before you could have some very significant purchasing power, but now you don't really have that much. And granted, it is at around 6%-ish. So Trump will always be working with dollars. He's out for crypto. He loves crypto. But it's always going to be about the dollar. And his policies are going to always be reflecting the value of the dollar and bringing money back into the US. You can use crypto to pay off the US debt. But that's on the premise that the US debt stays as it is. Yep, he's putting a cap on 10% on credit card interest rates. That wins a lot of people. But that also kind of squeezes banks. They're like thinking, oh, I'm not really liking that. But even if they got 10%, it doesn't matter anyway, because they're still making money off the back of the product itself. I'm not going to get into that. But what we're going to do today, guys, is just going to break it all down for you and understand what we've got going off in crypto. Bitcoin seems to be flirting so nicely around that 91,000 region, 91,000. And I'm hopefully going to help you make sense of what to expect going into today. So if you are new to the live, welcome. My name is Tino. I'm going to try and keep this one short and sweet. But I always say that, but never mind. If you are coming in, hit the like button. It costs you nothing, man. Come on. It doesn't cost you a penny. Let's get with the program. Here we go. So a couple of things that I'm concerned about this article right here. So you've got the European shares are lifted because of ASML. And this thing right here, the yen. I'm not liking it, guys. I feel like we're going to get another little bit of flavor from the Japanese yen. What do I mean by that? Well, if we just go over to the yen itself, you can see that yen is trading at very significant lows. It is trading at the significant points where intervention by the Bank of Japan can happen. Why? Because of dollar yen. Remember, it hurts them when the dollar is so strong, okay? And it also hurts their trade when their yen is so strong, all right? So they've got to try and find a happy medium. The only way that they can achieve that is by intervention, by pumping liquidity into the marketplace to effectively lift the yen, forcing the dollar to go down. But when you look at the dollar itself, it doesn't look like it's bloody stopping. It does look like it's peaked out around the 6.8% region itself. That means you are getting a lot more money. You're getting a lot more bang for your buck, okay? So that's why Bitcoin has been going up, and that's why the dollar has been going up at the same principle, because people are seeing that Trump's trying to do something for the US, and that is helping investors. But what you've got to understand is when the dollar's going up and the bonds market keeps on going down, it's not showing commitment from investors. So even though the value of the dollar is going up, the Federal Reserve, or should I say the US government, is having to pay high premiums to investors holding US debt. That's why you're not really seeing China really complaining too much, or Japan. And I've said this before, but the more I keep on regurgitating this information, that's going to be something that you're going to then relay in your mind when you are actually in trades, trying to work out why is the dollar going up, why are the bonds going down, why is the yields going up and the stock market's going down, like what's going on? Remember, China and Japan are the two largest holders of US debt, okay? And this is wonderful news for them because they're picking up 4.25% on the 2-year. 10-year, they're picking up what? 4.45%. The 30-year itself, they're picking up 4.6%. These guys are making change off the back of the US dollar going up, which tells you investors are, in essence, going into cash. That would make sense with the behavior of the NASDAQ. I mean, we look at the NASDAQ, you can see right now, it's pumping up, it's moving up and down. It's not really going anywhere. But the thing is with NASDAQ itself, they will rally price up to then bring it back down. I mean, look at what they were doing yesterday. It was quite a treacherous day yesterday. They marked price up, they brought it down, and then they marked it all the way up to only bring it down. Very, very treacherous ranges, which tells you the inconsistency of investors across the board. They're just taking advantage of short-term risk, and that is evident with the yields going up. But as long as we don't see the yields spread widen, then we're okay. But I've said this before, complacency comes into play when the spreads represent that investors are happy with things. But again, you've got to be mindful, man. Going into the update of this chart, look, man, we've gone down to significant areas, 0.29 on the smart money reading, which tells us we're in an extreme for where smart money has been selling aggressively into retail. And this is what the story is right now. If we're seeing that the NASDAQ is toying around these all-time highs, one more peak towards the upside to take out the all-time high could be the one thing that sets it in stone for when the market then prepares to start correcting. Remember, as we're saying here, in the article, it does go on to say that inflation itself goes here. There is expectation. No, where is it? Here we go. It says, while US inflation data yesterday fueled hopes of a potential Fed cut in mid-December, there's concern that Trump's policies on tax and tariffs will reignite the price growth next year. So investors are like, okay, we're going to get our interest rate cuts. Cool. We're going to get one in December. Fine. But what happens after that? Because if we get down to the 4.25% interest rate on the dollar, how's that going to help anyone? You know, banks are going to start struggling giving off financial products, but it looks like the consumer is absorbing the rate of inflation. So it's a really tricky situation as to whether or not the Fed cuts the interest rates aggressively or it just decide to pause just in case they need to factor in what Trump's impact on his tariffs is going to be overseas. Because ultimately, the consumer is going to end up paying for it. And that's the messed up thing, okay? Now, quickly going over to Bitcoin to understand what we've got going over there. So Bitcoin, it's been doing very, very well per se in the sense where we've swept the all-time highs and now we've come back down again. And what I said yesterday was very important. When you see red vector candles breaking down from the highs of a move, but it doesn't actually break down a significant range. So look at all the red vector candles, and this is an exercise for you all. Look at all the red vector candles that have appeared as Bitcoin has been marking up, okay? There's a red vector candle right there. And then you've got this violet vector candle right here. The logic says that as long as they maintain price above the key moving averages, okay? Now, this is really for the holder, right? As long as they're maintaining price above those key notable areas and the moving averages, if the red vector cannot break down to tap those moving averages, then it would be consistent with them buying at the highest point at the lowest range. So hypothetically, if we know that when buyers are coming in, because you can see right here, just a quick update on liquidations. You can see 7,927 traders were liquidated in the last hour. 21,000 in total. No, nearly 18,000 traders have affected. Yeah, 19,000 traders have been liquidated in the past 2 hours. So everyone's getting liquidated, and you can see all the margins all the way up here. Look at this. Look at all these margins, these positions, and heavy margins up there. We've got a nice order up here, 4.8 million to be sold at 95K. Got another 2.8 million, so 6 million up there. We've got another 9 million at 98,000. I'm wanting to see if there's that big daddy at, there you go, 15 million at 99,800. And if we hit the 100K mark, we've got that 20 million still right there. So it's still looking like it wants to be had, that order. And it's been waiting there for a little while. But what I'm trying to say to you about buying at the lowest point at the highest range, this is what it is. So here you can identify that is 90,152. That tells you someone's prepared to buy Bitcoin at 90,152. That means price needs to go down to that point for him to get a passive buy order, right? The best way for you to understand it, guys, is like this. Imagine you've got a trend, okay? This move to the downside is where the buying happens. We would understand it to be the rise, the retrace, the continuation. Now, the concept of continuation is all going to be based on how aggressive the guys who are buying here are implying to the retail trader that it's now time to go down. The faster they move down, the more likely they're going to try and move back up again if the trend is consistent to the upside, okay? So the idea is you're looking for green and blue vector candles to appear in this range when red vector candles have been created. So where are those red vector candles? We'll look at the chart over here. Can you see the red vector candle? They've been marking prices lower, hitting the long liquidations, making retail traders believe something that price is going to break down. The all-time high is here now. That's it. Bitcoin to the downside. Cool. But then what happens? Price starts to gain its traction and start moving back up again. If I just move it forward, happy days, you can see. So that's what was going on there. You trade back into that logic of the vector candle. We've got another one over here. Red vector candle can't break down below the moving averages. Although fundamentally they traded up and down, they came back into the vector range and then they continued back up again. There's probably a vector candle in there that they've managed to recover. Happy days. Then look at this. The idea is that you've got a violet vector candle that can't break down below the key moving averages. The logic and principle would suggest that you'd be expecting Bitcoin to try and come back up into that range. Okay. Depending on what time frame you're doing it from. You look at it from the 5-minute time frame. So let's just look at this area right here. All right. So there was a vector candle inside of that zone. Let me make sure of that. There's a red vector on that time frame. Let's have a look. There you go. Collection of vectors right there. Come on. There you go. So you got a green vector candle happening right there. You got a red vector candle. That was what led the move to the upside for that whole hour. Okay. And they managed to come back into those zones, completely recover the range, and then they bounced away from it. Okay. So that's what you're initially looking for. Ideally, stick to the higher time frames when you are doing this, because the higher time frames will give you more information, but you can use the smaller time frames, but you've got to make sure that you're factoring in your risk when you're dealing with smaller time frames, because it can literally go to the pan if you're using smaller time frames, because the blocks and all this concept about the moving averages, yeah, this is on the 15-minute time frame. You're adding more weight to it when you are using higher time frames. Okay. Really important to use the hourly. That's what I use, in my opinion. I find the hour time frame is going to help me understand the cycles. It's going to help me understand the continuations and what have you in the retraces. So refer to the hour time frame. And as long as you're not seeing any red vector candles or violet vector candles breaking down beyond the moving averages, then you are all good. If you effectively get a red vector candle that breaks the 50 EMA from here, for example, say it breaks down from that point, the first thing to do is not to go short. The first thing to do is to wait to see if it's not one of these candlesticks happening below the moving average, which means that you're looking to see if there's going to be a continuation back up. The faster they move down after such big rallies to the upside, the more likely they're going to try and work their way back up again. But the move back up will be slow, okay? Because they're creating the illusion that the market is now getting ready to turn over. So take that into consideration when you are trading BTC. Let's just quickly have a look at where we are with the NASDAQ. NASDAQ coming back up again. The S&P staying sideways. We got the dollar dominance pulling back ever so slightly. Just going into the news as well. 217,000 unemployment claims. That's good news. They expected it to be higher. It's now coming lower. But in crypto, this is what I'm talking about. Look at this. US Advocacy Group seeks policy shift to let federal staff hold small crypto assets. That's all good, yeah? But this is where it gets even interesting. Look at what it says here. Where are you? Here we go. The group observed that the growing adoption of stablecoins is enough evidence to support the bill. It also recommended some inclusions into the bill, including allowing banks and non-banks to issue stable coins and ensuring they are not treated like securities. Who are non-banks? Private equity firms, hedge fund managers. They're going to now get a sniff. This, right now, no banks are allowed to buy cryptocurrency. There's authorized participants who are the guys like BlackRock, JP Morgan, Bank of America, Fidelity. They're allowed to buy the crypto, but it's done on behalf of a transfer agent. So someone goes and buys it out on their behalf. They are authorized participants. So they're allowed on behalf of someone else to buy it. And then they create the ETF. Okay. They actually allow this to come into play, ladies and gentlemen. And good old Barclays Bank or HSBC says, you know what? We fancy a little bit of Bitcoin. Say goodbye to MicroStrategy. All right. Say goodbye to anyone that holds a significant amount of cryptocurrency. It's literally banks, market makers, private equity firms against BlackRock. That's what's going to fuel Bitcoin's move to the upside. And we're all going to be sat there like, oh, yay, Bitcoin to the moon. And then you're going to wet the bed, and then you're going to see the fees that it requires to sell the Bitcoin. I mean, you're getting, I mean, these price levels, someone 5% on significant transactions. We're talking, it eats a bit of your capital, man. Especially, say, for example, you're selling, say you sold like $1.8 million worth of Bitcoin, okay? Or say you bought $1.3 million worth of Bitcoin and you sold it for $2.3 million. Well, you want to sell it, you're paying some fees on that, man. So you got to be ready for the higher fees to come into play unless you start doing other things. But anyway, we're not going to talk about that. So with that being said, ladies and gentlemen, just having a navigating the view, Ethereum apparently is going to go to $4,000 or $20,000 according to good old Raul. So he's talking about, he says that the target, he says Ethereum now versus the previous periods is following the last in Bitcoin. Now, whether it gets to the target here of 20,000, who the F knows? Doesn't really matter, but directionally, we see what happens. Ethereum should accelerate from here, and I'm pretty confident that it will. It makes you think to yourselves, like, what the hell is Ethereum doing, man? I mean, the whole thing of Ethereum just not going anywhere is an absolute pain in the backside, if I'm honest with you. Just looking at it from a charting perspective, you're going to make yourself believe that, is this the idea of the rise, the retrace, the continuation? But you've got to understand, Bitcoin has not even tapped the 50 EMA as aggressively as Ethereum, because it's actually trading below it, and there's curvature on the actual Ethereum move itself. But the Ethereum is currently trading within the Asian session range, and it's within the psychological ranges themselves. We could get some activity going in towards the end of the week, going into the weekend. So you got to be very cautious when you're trading Ethereum, because they're giving us clues that they're going to get ready to try and attack the highs yet again. Okay. Excuse me. Any questions, ladies and gentlemen? Like I said, I want to try and keep this live short and sweet. Okay. You want to profit during the gold rush? Invest in shovels. You know. Tina, with the Japanese yen getting so low, Japan is most likely to increase interest rates soon. This is the logic, right? Because the last time Japan intervened, because the only time Bank of Japan intervene into anything, it's to either increase the interest rate or to provide an intervention just to inflate the yen against the US dollar, because it's hurting them, all right? The dollar is getting really, really strong. And when, look, these are the interventions, if you can see. These are when yen steps in and starts intervening, okay? And buying back everything. So it says here, historically, when the yen fluctuates sharply, Japan's Ministry of Finance would intervene by engaging in foreign exchange transactions, buying and selling foreign currency to stabilize the yen. So what does that mean? That's the carry trade principle. So in order to achieve this, what would they need to do? They would need to sell bonds, sell US dollars if they've got that risk, sell US dollars, chuck it into yen, okay? And then yen naturally increases. And the way the guys in Japan do it is they effectively force domestic and commercial businesses who have any risk holding dollars to sell those dollars back into yen, because they originally borrowed the yen, because the yen is such a cheap asset to borrow. It's a low yielding asset, right? And you can get loads of that yen and then put that yen to work in a higher yielding asset. Right now it's the dollar, and then put those dollars to work by going over to the stock market or Ethereum or Bitcoin and all the rest of the gang itself. Okay, so you can see it's like, let's look at this. NASDAQ, yeah? Look at NASDAQ. NASDAQ is trading to the upside. Look at Aussie yen, because Aussie yen is also another measure for the carry trade, okay? So if Aussie yen maintains its stance and holds inside of this range, right, that means what they're doing is they're exchanging the yen, or they're exchanging, well, in this principle, they're exchanging yen and using yen to buy Aussie. So they'll buy yen, borrow it, and then they will sell it into Aussie, and then use Aussie as a higher yielding asset to go and invest in stocks, US markets, whatever, okay? That is where you naturally see the appreciation of the Australian dollar against the yen. Now, when you zoom out and have a look at how it's been going, all right, you know that the yen carry trade principle from the Aussie itself is currently intact. Look, so what have you got here? Notice the purple line is effectively the NASDAQ, all right? So when NASDAQ's going down, they are selling stock, all right? Principally, they are selling stock back into yen, because yen, they're exchanging, taking profits. So when you're selling your Aussie, you're selling it back into yen, right? Then as it starts to come back up again, NASDAQ starts to go back up. So they consolidated in this area and they started to buy more yen, exchange it into Aussie, then use that Aussie to buy NASDAQ. NASDAQ starts to come up again. So what you've got to do is you've got to look at this and say to yourself, okay, then so what's going on? It looks like there's a lot of accumulation here. Is it accumulation to suggest that the yen is going to continue to go down and Aussie's going to shoot back up, which means the NASDAQ's going to keep moving up? That could be the logic. They could run towards the all-time highs yet again, but we would understand that the carry trade principle from the Aussie is coming into play, you know? So, and it helps you to keep an eye out on that sort of stuff, ladies and gentlemen, when you are trading. Tina, could you look at the XRP chart? Yep, 2 seconds. Yeah, here we go. So right now, XRP had a little bit of a deep egg right there. There's a little base over here. We've seen a little bit of activity on XRP, just trying to work up and down. But historically, XRP really doesn't do anything. And sorry, you said XRP. I thought you meant the stable coin, bro. Silly me. What am I doing? XRP. Don't wind me up. Please. Don't. No, I can't. Look, can we just stop with the profanities? I'm not interested in XRP. I'll only start talking about XRP when it gets to $1. That's it. That's it. That's it. No more. I'm not talking about it anymore. Okay? Okay. Anything else, ladies and gentlemen? Any other questions? Tino, a pro hater. Yeah, I'm a pro hater for XRP. I hold XRP and I'm a pro hater and I'm proud to hate it. That's it. I don't care what anyone says. Other than that, ladies and gentlemen, how quickly could you see the negative blowback from Trump's tariffs? How long would this take to start taking effect? It's not going to take effect it's not happening overnight. It's going to take a few months because he's now toying with the idea of the tariffs. In a sense, how is he going to put it out there? But they know that that's going to be something that's going to happen. That's probably why everything's shooting up in preparation for that, because the market will always price it in now. And then when the event happens, you're like, no qualms, no worries, you know? So I hope that answers that. Here we go. Could you explain the reason for stock prices moving to the upside caused by valuations being realigned against the M2 money supply inflationary adjustment? Kyle, I'm going to speak about money to M2 supply later on tonight. Gives me something to talk to you about, man. But yeah, the money supply, when that goes up, Bitcoin goes up, happy days. And it's the same with stocks. But you've got value right now in stocks, which is absolutely phenomenal. It just doesn't make sense. So with that being said, guys, mad love and respect. Remember, Powell is speaking tonight, talking about the icebergs, trees, and climate change and what have you. No interest from it. Sorry, but just be careful. It's at 8 p.m. GMT. All right? Mad love and respect, guys, and I'll speak to you all later.